You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO, This Week in Futures Options. The program where the name says it all. We break down the week that was and indeed still is from futures, options, trades, trends, developments, all sorts of fun perspectives here. What's going to make it onto the show? Is it going to be FX? Is it going to be ags? Is it going to be metals, equities? You never know. That's why you have to tune in each week. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are mainlining these days. Hope you're having a great day. Profitable, safe trading week out there. Remember, if you do like what you hear, this show, anything else on the network, and we see a lot of you mainlining TWIFO these days. Hey, we get it. It's a fun show. But there's a whole network out there, nearly a dozen shows. So if you're not listening to that on wherever platform you're getting this, and it's pretty much available on every platform under the sun, then you're missing out on a whole bunch of content. So A, make sure you upgrade to the full network. B, if you like what you hear, this show, anything else we do here on the network, throw a like, a star, a comment, a rating, review, whatever your platform lets you do. All of it in aggregate at the end of the day does help new people continue to discover this content, because there's new people discovering these markets all the time. We all know them, listeners. They need a place to turn in these turbulent waters, so give them a helping hand out there. And of course, if you want to give yourself a helping hand to some additional content you're not going to get anywhere else, theoptionsinsider.com/pro, the place to go for great Q&As. We've had Rich Assell on this show many times. He talks a lot about futures options over there at CME. Well, he was just on our Pro Q&A, dove deep into a whole bunch of great complexes there. Of course, Options Oddities every Friday, where you guys and gals can break down all the week's unusual activity, get some fun trades that are working out pretty well, if I do say so myself. So all sorts of fun to be found there. theoptionsinsider.com/pro is the place to go to find out more, as we find out who's joining us in the old CME Group hot seat today. And I am pleased to welcome back on an old friend of the program. He's making his annual appearance right towards the end of the year. Our old buddy, Mr. Derek Sammann, the Senior Managing Director, Global Head of Commodities, Options, and International Markets over there at CME Group. Derek, welcome back to TWIFO, sir. It has been too long.
Thank you, Mark. Good always to come back at year end and have a little year in review with you guys.
It is fun. It seems like your title grows every time I chat with you, Derek. Is there anything you're not head of over there at this point?
I just put that stuff on my business card. It makes my mom very proud.
It makes for a long business card, too. I don't envy you having to lug that thing around, Derek. But a lot to get to. As you mentioned, it is your annual check-in with us here on the show where we get to dive deep. Going to dispense with our usual format, at least for a little bit, listener. Maybe we'll get to some fun a little bit later. But I want to dive first into some of the interesting trends and developments we've seen out there. Because, Derek, when you're not talking to us every year here on the show, you're out there watching all of the various options products ebb and flow over there at CME Group. So it's been an interesting year, I think, to put it mildly, as every year post-pandemic has been. It's been an explosive year from an overall volume and occasionally volatility and just about everything else under the sun year. So from your perspective, as you're watching all of the options flow over there at CME, what really stands out to you when you look back at the crazy year that has been 2023 so far?
Well, it's just a fascinating year to be sitting on top of a multi-asset class options exchange, as I have the privilege to do over here at CME Group. What's really struck me this year is the fact that we've seen consistent high degrees of performance in options across asset class all year. You know, there are some years that we see spikes in activity in one, maybe two asset classes, or maybe there's a burst of activity for a quarter, maybe 2 quarters. This has been a sustained, continued growth story across asset classes, across the entire year. This has been a year that certainly has not lacked for volatility, but it's also been that volatility that's been tradable volatility. I would say there were portions of 2022 that we saw some volatility that was a little too extreme for some folks, and we saw some people pull back. Even in that environment, Mark, you know, I had this conversation with you almost exactly a year ago today. 2022 was an all-time record year at about just over 4 million contracts a day traded across our options platform. If you look at the events of this year, very happy to note that we are on track for another record, and not a record by a little amount. Our options business year to date is up 22% to about just under 5.1 million contracts a day. That's up from 4.1 million contracts a day for 2022. And what's really pleasing to see is that 5 of our 6 asset classes are up between 15 and 30% this year. And if I were to quiz you and say, which of our 6 asset classes do you think has had the fastest growth this year? I'm not so sure you'd guess the right one. So I'm going to put you on the spot, Mark. Which of our asset classes do you think had the fastest growth year to date this year?
Fastest growth this year. Well, you're right. We've seen so many spikes and so many things, like the energy has been exploding. Equities kind of always exploding out there. I'm going to go out on a limb and say just pure 0 to 60 growth. I might go energy.
Ooh, that's a good guess. That's third place right now. Our fastest growing asset class on the option side is metals. Our metals business on the option side is up 29%. Rates are up 27%. Energy, good choice, up 25%. And then followed by equities at 17% and our ag business up 14%. I mean, you're talking about double-digit growth between 14 and 29% across 5 of 6 asset classes. That is just astounding. And again, when you break that down and look at the growth by asset class, sometimes you'll see, well, it's growing in one time zone or growing by one client segment. Again, we're seeing strong, broad growth across time zones. The fastest part of our business in options is actually options outside the U.S., which year to date is up 33%. So options are pacing the growth of the firm for sure. Options outside the U.S. is pacing that growth within the options complex. So there's so many sub-stories going on in each one of these asset classes, and it's just been really, really great to see our customers come back and continue to trust us to place their faith and confidence in our clearinghouse and our platform, trade our products, and we earn that trust with our customers every single day. And that's paying off for them, it's paying off for us. And we see volumes growth like this and open interest growth like this and client segment growth like this. It's confirmation that listening to your customers and building products and technology that work for them is always going to land you in a good place.
Just want to point out for the record, I was a couple of percentage points away from the top there. So I was within spitting distance. It seems like we talk energy literally every week. If it's not nat gas, it's WTI. Sometimes both. It's inescapable on the show for almost the entirety of the year. So I felt pretty safe going energy, but you never know. That's why we do the show. That's why we crunch the numbers here at the end of the day, Derek. And I like what you mentioned there. I like what you said, sub-stories, because you're right. This has been a year of sub-stories. There's sub-stories in just about every complex we touch on here this year. What's going on with nat gas? What's going on with WTI? In the equities, it's been nothing but short duration all day. Everywhere you go, there's a different complex with a different sub-story. In the ags, for a while there early on in the year, it was still the legacy of Ukraine. It has maybe shifted to other things. Every complex has their own unique and interesting and often compelling, sometimes terrifying sub-story. So when you look back at this year so far, Derek, obviously it's not done yet. We still have almost a month to go. So there are still some surprises to be had, undoubtedly. But when you look back at the year, which of these sub-stories really stands out to you as maybe the most surprising? Or made you stroke your chin and say, I didn't expect that, Derek?
Well, I think you were definitely onto something, Mark, when I kind of gave you a trick question there. What's the fastest growing asset class? And you put energy. If I were to ask you what for the quarter this year, going into the fourth quarter this year, what's this fastest growing asset class? You're absolutely right. Our energy options business through yesterday in the fourth quarter is up 64% for the quarter. 64. Now, you kind of look at that and say the events of the Middle East and the October 7th events and the ensuing uncertainty around OPEC, you'd expect to see that kind of growth. The great thing is with our energy business up 25% year to date, 64 in the fourth quarter, that's been consistently up quarter after quarter after quarter. So we've just set records all over the place across, just not at the aggregate level, but within asset classes as well. But to answer your question specifically, I think that this year has been a really, really strong story for commodities overall. Listen, fixed income and with 5 rate moves and basis rate moves up to 5.25 and now possibly back down, uncertain from the Fed funds perspective what the next rate move is going to be. You'd expect that we'd have good results in our fixed income options business, and that continues to go from strength to strength. And that transition from LIBOR to SOFR, which seems like a million years ago, we just completed that process between February and April of this year. So we're hitting on all cylinders on the fixed income side. So I don't think anybody thought that we would not grow our options business in fixed income this year. And true to form, it's our second fastest grower this year, up 27%, and that's a good chunk of the options that we do here at CME Group. I think the very pleasant surprise, although not a surprise to me, has been the resumption of activity on the commodity side. As I mentioned, that particularly, closing out this year, our energy options in fourth quarter up 64%, our metals business on the option side up 44%, and ag options up 41%. That is just spectacular growth, and that's on a base of what is already record levels of overall options activity. So I would say, the difficult challenges from 2022 with the Ukraine war and the invasion and the massive jump in volatility and that squeezed some folks out of the market for a while. We've seen certainly sector rotation into commodities this year. We're seeing our commodities options, ags, energy, and metals just significantly outperform the broader franchise this year. And it's been a really, really exciting time to be talking to our customers about how they're able to use the full suite of our options products, whether it's the weekly Monday, Wednesday, and Friday on WTI, or the Monday, Wednesday, Friday that we have in the precious metals business, or the products that we have in mid curves and fixed income, or whether it's the work we put into short dated ag options. This has been a commodities year for us, both on the futures and the options side, but especially so on options. And it's just really, really great to see that resumption of activity on the options side and just a real strong performance there.
Derek, you sparked some interest. I'm looking at our live chat. They were making their own guesses when we were guessing before about what was the fastest growing. Looks like more than a few of them were going energy. A few of them guessing crypto. I could see that crypto can go from 0 to 60 in a heartbeat, and it certainly has over the better part of the last month. So not a bad guess. I don't see any metals folks in there. So intriguing. And Derek, you hit on one of the other sub-stories that to me has just been running away with it this year in terms of mind share and market share, and it's all anyone seems to be able to talk about these days, which is, of course, the growth of the near-dated. Call it what you will. Call it weeklies, call it zero DTE. It's all anyone could talk about. If you look at the equities, it's all anyone seems to be want to trade these days. If you crunch big products like the E-mini S&P or the SPX or whatever index flavor you look at out there, fully half of the volume these days is going to be going away, if not within 24 hours and somewhere around 48 hours. So it's a very near-dated ball game these days. And that's been a big surprise to me. I know when you guys first listed these, I think it was April of last year. Like a lot of people, I thought, okay, they're just completing the cycle. They had 3 days of the week already. Let's just add the other 2. No big deal. We've had near-dated expirations forever. It's not a big deal. And yet, I could not have been more wrong. It has galvanized this new community of traders, it seems like. And it's even taken some people who are long-standing options traders and changed the way they trade completely. They live almost entirely in the world of 0 day now for a variety of reasons, not the least of which being they don't have any residual position. They can go home at night and lay their head on their pillow and not have to worry about anything. It all starts fresh the next day. So I think maybe we all undersold that being able to sleep at night factor, which is something at the end of the day that is important to a lot of people. So for me, my biggest surprise, the tail end of last year and certainly all throughout this year, has been just the explosion of interest in all things 0 day. I'm curious for you, Derek, you've been around the space for a while. You and I haven't really had a chance, as you mentioned, to chat since about exactly a year ago. So since that time, I'm not sure if you've noticed, but the near-dated stuff has become a bit of a hit. I'm curious if you're as surprised, really, as I am about just the endless interest in these, the incredible amount of volume they're doing, and just the amount of mind share they've managed to capture in such a short amount of time, Derek.
Yeah, I think that there's no question that the combination of shorter dated maturities and sometimes the smaller contract sizes, which have also been a huge hit for us over the last couple of years, have really appealed to traders that are looking for cost-effective ways to get in and get price exposure to individual markets. You know, when you talk about the short-dated explosion, we absolutely see that in our markets as well. If you look at what we'd consider our short-dated option, which is anything 1 week in, we've got 5-day-a-week options expiration in equities. We got 3-day week in our energy complex. We've got 3-day week in metals, and we're always looking at ways that, is there an optimal decision to add those additional Tuesdays, Thursdays in? We're taking a lot of customer feedback on that right now. But, our own options business certainly reflects that. But I'd actually say that the kind of the short-dated phenomenon is actually a sliver of a piece of a much larger story. And I just think that story is, and you're going to love this for the theme of your show, it's just options continue to go from strength to strength. The current flavor in equities is short-dated, very much so. The flavor across all of our asset classes, large move and large activity increase in short-dated 1 week and inside for all of our asset classes. But we're actually seeing growth, even faster growth across the curve and across all of our asset classes. So I think when a lot of people talk about zero DT as it relates to equity options markets, that's not reflective of what we're seeing in energy, what we're seeing in fixed income, what we're seeing in FX, what we're seeing in metals, and what we're seeing in ag. So we think there's a much broader option story that I think is being missed a little bit because there's so much focus just on the short-dated equity option story. To be clear, our short-dated equity options are at record levels. We do about 1.5 million contracts a day in our sort of 1 week in across all of our asset classes. It's a little bit less than 30% of our total options volume, so we're certainly seeing some movement in to the shorter end of the curve. But what we're also seeing is even faster growth out across the curve and open interest additive. And that means we've got more people that are trading options and actually taking volatility positions in addition to those folks using the very short-dated products that are really just a reflection of the price. If you're trading 1 day or 0 day or 2 day, there's no volatility component. You're not taking a position that, hey, I think volatility goes up and down. Short-dated options are reflective of price movement. Think delta, whereas the longer end of the curve is volatility-based, think vega. So to the extent that we've got activity increasing across the entire curve, even faster growth outside of the front end of the curve means that short-dated activity is contributing to growth, but it's not the primary driver of growth. So that's how we think about it. So when you talk about the zero DTT equity story, I think it's missing the broader I'd say adoption of options across asset class, which you see at CME Group because we have every major asset class, and you see activity even faster growth across the curve. So it's a great story for the options industry. It's a great story for folks that are looking for additional tools to drop into their toolkit. And, everybody in this industry wins when you get more people trading more product that are on deep liquid on-screen markets, 23 and a half hours a day, 5.5 days a week. That's where the market wins. And so, shows like this highlight the opportunities and highlight the growth. And any way that we can amplify this story that, hey, come on in, the water's fine, the water's safe. This is a great place to be choosing to allocate your risk, whether you're looking for just price exposure at the front end of the curve or volatility exposure in the mid or the back part of the curve. These markets are where opinions are being expressed, and you want to be where the professional open interest holders are.
Interesting across the board here. Derek, one of the questions we've received pretty much all year, it seems like, is, hey, as you mentioned, everyone's obsessed with 0 day equities. But if you look beyond that, there are other stories out there as well, including people want to know when that style of liquidity may expand across complexes, get beyond just the zero-day equities and start looking at some other complexes. People clearly are gravitating towards this. They want to know when they could see it in other complexes, which also raises the question of which complexes at the end of the day are even really suitable for this type of liquidity. Probably wouldn't put ags at the top of my list. They tend to trade by their own rules of engagement, but we thought we'd put it out to our audience. So I'll give you their thoughts first, Derek, before I make you guess. But we asked them about a month and change ago, which complex do you think should list the zero DTE options next? We gave you 4 general choices, listeners. We said, single name stocks, because you folks love those, so your Apples or your Teslas. Or you're going down the commodity route, so you could be your ags or your energies, any of those. Or we went crypto, so your Bitcoins or your ETH, so all those. Or we went the volatility complex, and 43% of you ended up going for the single name stocks. I get it. You folks want your single name zero-day Apple and Tesla. I get that. Beyond that, it was volatility, which was kind of interesting to me. And Derek, I know a bit of an intriguing one for you. We'll get to all that fun in a little bit. Then came the commodity side, so your ags, your energy, pick whatever you want in there. And then crypto bringing up the rear. So I'm curious for you, Derek, A, do those results surprise you or not so much? And B, as you're looking across all of the liquidity that's going up at CME, as you were just mentioning, you have liquidity from the front day all the way out months and years in some of these products. Is there another complex outside of equities where you think this style of trading is uniquely well suited to expand next?
Yeah, it's a great question. That the results are just sort of actually don't surprise, particularly top choice being single stock equities, because you're talking about largely equity index traders that are already used to equities and get that space, and so that's an easy transition to make to single stock. So that totally makes sense to me in terms of being in their comfort zone, being in their wheelhouse. From my perspective, I think the more exciting kind of overall market growth story piece is not going to surprise you here is on the commodity side. And let me give you an example of that. I think we certainly have learned to walk before we run, and take a lot of client feedback in terms of product development, rolling out new capabilities, putting new points on the curve, adding functionality to our front end. All of those things are driven by customer needs. So we spent a lot of time customer validating any ideas that we have or any feedback that has been brought to us that indicates, hey, there's an opportunity here to build something more into our products that the customers would want. So as you know, we rolled out weekly Mondays and Wednesdays in WTI options not long ago in the middle of this year. And let me give you a very contextual example of the success we have already seen just by going from Fridays to Mondays, Wednesdays, and Fridays. So give you a good example here. So we saw in the week in the record numbers leading into the last OPEC meeting on November 30th, we saw WTI weekly options in aggregate, Mondays, Wednesdays, and Fridays, that were just recently launched, hit a number of series of back-to-back volume record days. So uncertainty around the whole OPEC decision-making process, strong case for letting customers consume information intraday, every minute of every day, changing opinions as to would they meet, wouldn't they meet, would it be a 1 million barrel cut, would it be a 500,000 barrel cut, would it be 2 million barrel cut? And what that actually meant was we had 6 different options expiries available for these guys to hedge. Our November ADV in our weekly WTI was just under 20,000 contracts a day, our highest ever. Again, we just put these Mondays and Wednesdays out earlier this year. On November 29th, we had the second highest day in history at just under 40,000 contracts traded. And then on November 30th, again, about 38,000 contracts traded, while we also reached an open interest all-time high of close to 67,000 contracts. So you're talking about trading around event risk, having products that are really reflective of the price path or the belief on the price path, and allowing customers to use options instead of futures, so a nonlinear product as opposed to a linear product, to really give folks an ability to do precision guesstimating or precision planning around what they think the outcome of any particular event is. So it's a great example of where we enabled customers to be able to trade Mondays, Wednesdays, and Fridays in an event, and we just saw a huge increase in volume and activity. Now, does that mean we're going to launch Tuesdays and Thursdays next week? No. We are making sure that the products that we put out there and the liquidity pools that we have in each of these dates are sufficiently liquid. Because, Mark, there is a point at which you take liquidity, and if you stretch it too thin, you actually end up with a 1 + 1 = 1.5 kind of scenario. We're more in the business of ensuring that 1 + 1 = 4 for our customers. So we want to make sure that we're being cautious and careful. Certainly the move to adding Mondays and Wednesdays and WTI options was a great add to the portfolio. We're going to settle here. We're going to take feedback. We're going to see how this process grows. And if there is a significant, strong input from customers and the volumes and open interest trends support it, we would absolutely consider adding additional dates. But our default isn't, wow, this model works in equity, cash equities market. Let's deploy it in ags. I mean, you point that out. That's not how we think about this. So we'll walk before we run. We take a lot of client validation, take our time in taking these decisions. And when we see success, we want to make sure that the next step we take is in line with customers' expectations and will be value added to them, not detractive or destructive to liquidity.
So, Derek, if I can read between the lines there, then the final 2 days of the week coming confirmed in the next few weeks.
We're always taking input from our customers. And when we see growth and success, that gives us encouragement to look at other markets like metals, for example, and kind of looking at the Mondays, Wednesdays, Fridays. Again, great success there. And where we see feedback from customers that are across these markets, exciting opportunities to take more feedback. And then at some point, we'll be sharing with you guys news about possibly doing something. So keep your ears tuned.
Well, that will certainly make a lot of our listeners happy. That certainly would have been my go-to if I had to pick one as well, because you're right. You're already part of the way there. We have a contract expiring within 24 hours out there right now. So you're getting some of that 0-day fun out there right now anyway, and the volume is certainly up. Maybe if we have a chance to break down WTI later on the show, we'll get into some of that fun. But yes, very action-packed week again and an action-packed quarter, which again is why I guess top of the show, it's been lighting up our tape quite a bit out there. But Derek, I touched on volatility before. I know that's an area that is near and dear to you out there because you really spearheaded the whole CVOL initiative over there at CME. It seems like just yesterday. It's been at least a couple of years over there now. And I know when you first launched them, they were pretty much just close to close, and they were kind of a good but obviously limited data set for looking at what's going on from a vol and a skew perspective across all of these asset classes. And at the time, I kept bugging you. I was like, okay, let's update them. Let's get to real time and everything along those lines. You've now done that. You've added real-time streaming version of CVOL, so folks can get in there and sink their teeth into those on a real-time basis, which is great. What can we look forward to coming next in all things CVOL, Derek?
Yeah, as you guys know, and that's a great kind of timeline of how we rolled this thing out. We first put it, this is still a non-tradable index. We have not put any listed tradable products on the back of this yet. We've now got, I think, a total of 45 or 46 different CVOL products, some of which are baskets. There's a commodities basket CVOL. There's a fixed income basket. There's an FX basket, as well as the individual products themselves. You're right. We started with just end-of-day calculations, which was sort of a rudimentary entry point into what is this thing, and why do I care about it? We went to real-time ticks, and that's been out there for about a year and a half now, and we're still taking client feedback on, hey, how useful is this tool for helping me make trading decisions? How useful is this for you to understand what's going on in the broader market? Remember, our CVOL index doesn't just give you a number to say up or down. We've got our up VAR, our down VAR. We've got a risk reversal skew. We've got various ways that you can use the CVOL suite of tools and analytics to give you a sense, like when you look at the risk reversal skew, it tells you exactly that differential call versus put and what that looks like now, what it looked like a week ago, a month ago, a year ago, what it looks out across the maturity curve. And there's so much rich information there that the market is telling people that was really difficult, if not impossible, to unpack without kind of a CVOL suite of tools and resources and analytics. So we're still doing some work on that. We're making sure that, anytime you're talking about building a product and making something tradable, the underlying price itself has got to be super robust. We need to know that it's 100% reliable. That's what we're known for at CME Group. So, we're doing a lot of work there just to make sure that the data is good. And if we're going to put a tradable product on the back of it, that the technology is there, the robustness is there, and then everything that the market has come to expect from CME Group, that we hold ourselves to those same high standards in every product we put forward. So nothing to share at this time, Mark, but I will tell you we are definitely getting a lot of client feedback that's very positive, and the ways that people are consuming this information, the ways that they feel they're being equipped to make better, more informed trading decisions with CVOL in their toolbox is really encouraging. This has been a project that we've been working on the last couple of years, and we're going to keep working down this path, but nothing to share at this time. But we're thrilled with the adoption that we're seeing, and we're really grateful for the positive feedback we've gotten so far from our customers.
I like it, Derek. Just the fact that you're talking about potentially someday having a tradable CVOL. That gets me excited, Derek. I love talking equity volatility all day. We have a show every week on the network all about equity volatility, but I would love to sink my teeth even more into things like, let's say, WTI. We're just talking about crude oil volatility, ag volatility, Class 3 milk. I don't care, Derek. I'm open to all of the ball out there. So the fact that you're still thinking along those lines makes me excited. I would love to see something tradable on these one of these days, just to add to the pantheon of available volatility products out there. Since we're looking ahead, we've already been going for half an hour, Derek. I guess time flies when you're having fun. Since we're looking ahead now to next year anyway, talking about some other products, it's just you and me talking here, Derek. Nobody else listening. Give our listeners a little bit of a hint, a little bit of a tease of what they can expect, maybe what they can look forward to on the CME options front next year.
Well, I would say probably more of just the phenomenal growth that we've been putting out there. We're continuing to make sure that we are growing our liquidity pool out in Europe and Asia. As I mentioned at the earlier part of the show, our non-U.S. options growth just continues to be such an important story for us. With the overall options complex this year up 21%, our non-U.S. options business is up 33%. And I mean, our EMEA-based business has really been leading the charge. Our EMEA-based options business is up just under 40% this year. And that's already on a record year. On a record year. So I would say we're going to continue to push down that path and bring more new customers into our markets in Europe and Asia. Europe has been so strong for us this year. I think we'll continue to embed more functionality into CME Direct. As you know, that's our front end that we provide for customers to be able to give the amount of analytics and data and kind of market insights. And that's where you can go to backtest strategies. You can pull historical data there. You can look at things like heat maps there, and you can execute directly on CME Direct. So it's a front end where we built a lot of analytics and capabilities, and we're trying to make that as easy as possible for customers to navigate through, pull information from, get executable insights from, and then go do some trades. And that's an area where we've been building. We're seeing record levels of participation, record levels of volume through the platform, and that has been a huge part of our non-U.S. growth by giving customers a platform that is inside their time zone with deep lit markets and where they can go and feel like they've got great access to the deepest liquid options market in the world. And that's on CME Group. So you'll see us roll out more functionality and more analytics and new capabilities there. And as always, you're going to see CME Group out within our trading community getting feedback on what's missing, what can we do more of, what can we do better at. And so we're always looking to make sure that we're reinventing ourselves and moving forward. And then as we continue to mature our relationship with Google, and Mark, I think as you know, we announced a little over 3 years ago that we had done a strategic partnership with Google, whereby they took a $1 billion stake in CME Group, and we entered into a 10-year strategic partnership with Google. The tools and the capabilities that we're able to get access to from a world-class institution like Google, combined with our world-class market data business, is creating some really, really fascinating opportunities. So in a world of generative AI and machine learning, we've got the best partner out there, and we think that we've got the best market data in the business. And so you're going to see us move out there and continue to bring new innovations to the market, leveraging the best capabilities of our technology partner in Google.
Well, speaking of that market data, we got a little bit of time left in the show, so let's see if we can crunch some of it right now, a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers. See, we're not going to leave you hanging. We're going to hit on a couple at least today before we get out of here for this week. And Derek, you know the drill right now. Let's start breaking down everything, lighting it up over there at CME this week, to the light side and to the dark side. Derek, where should we begin our journey this week? To the light side, aka the upside, or to the dark side, sir?
I always like bad news first. Let's go dark side first.
A man after my own heart. All right, to the dark side we go, listeners. And by the way, you can see this chart if you do follow CME on Twitter, if you follow us on Twitter as well. We both tweeted out right before showtime, and it's a rare week. It's almost a 50-50 week. We haven't seen one of these in a while. Usually we're pretty heavily biased in one direction or the other, but this week, pretty straight down the middle, even though the largest percentage mover is to the upside. We'll get there in a second. First, to the dark side we go, listeners. Number 5, starting off in the energy complex, it's heating oil off 7.21%. In fact, we actually have a tie for 5/4. Don't see that too often. Number 4, keeping it in the energy complex. Again, hint, hint. Why, I guess energy at the top of the show, listeners. A nat gas, number 4/5, also off 7.21%. It was our number 1 dark side mover last week, off 7.4%. Number 3, keeping it in energy, it's RBOB, off 7.53%. It was number 1 in the other direction last week, number 1 to the upside, up nearly 5% last week. So an interesting turnabout for RBOB. Number 2, keeping it in energy yet again, it's Brent, off 8.13%. And our number 1 dark side mover, we have a clean sweep to the dark side this week, listeners. All energy all the time. It is WTI, off over 8.36%. It was number 4 in the other direction last week, up about 3.75%. So again, pretty strong dark side turn for the energy complex this week. Let's see what's lighting it up to the upside. I'm guessing won't be any energy. Number 5, off to the rates. It is the 30-year, up 3.41%. Number 4, from the rates, we go off to ags. It's KC wheat, up 3.89%. That was number 3 in the same direction last week, up 4.2%. So good couple of weeks out there for KC wheat. Number 3, back to the rates. It's the ultra 30-year this time, up 4.75%. Number 2, back to the ags. It's Chicago wheat, up 7.44%. And our number 1 light side mover, like I said, the biggest percentage gainer was to the upside this week. It's our old friend Bitcoin, up 14.51%. You don't need me to tell you that. That's been on the rampage of late out there. But Derek and I were just talking about maybe potentially looking at some more near-dated liquidity out there in WTI. Energy is dominating our dark side tape this week. So I think we'll wrap it up with a quick sojourn into energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everyone. Welcome to the wonderful world of energy. You know where to go to find all this data for yourself. CMEGroup.com/TWIFO, TWIFO. That'll get you there. /TWIO, TWIO. Should also get you there. This week in futures options, I should say out there. Either spelling will get you to the reports. Once you're there, go into that drop down, go down 3 slots in the asset class to energy. Then we're going to hang out in crude oil, I think, today, because it is the number 1 dark side mover and because we talked about it so much on the show out there today. And coming into the start of the show, we were just saying on the show last week, I think our guest was Carly Garner, what would happen if crude oil broke back into a 60 handle? Well, we are there this week. 69.75 is where WTI was at the start of the show, listeners, off about 4.25 points. Again, that's just this week. If you go back to the end of the show last week, it's off over 8, about 8.36%. So a rough week out there for WTI. Could not maintain the 70 level, broke through it out there this week. And as we were just talking about, Derek, with all this near-dated liquidity out here, it's been a pretty active week yet again. Usually we would expect a decent week in WTI, somewhere between 400, maybe 450,000 contracts. This week, once again, blowing the doors off that, closing in on 600,000 right now, 588,000 contracts on the tape in WTI. And once again, keeping things near dated, 41% of that going up in the Jan contract that has about 7 days to go. So we do have an assortment of weeklies out here right now, not the full gamut, and at least not yet. But we do have quite the assortment. We have a 1-day contract, we have a 4-day contract right now, 6 days, and indeed 7 days. So you have quite the assortment of near-dated liquidity out there to choose from. So Derek, seemed like we've been talking about energy a lot on the show today. Are you at all surprised that we're seeing WTI taking the number 1 dark side spot, of course, this week, but also such a resurgence in volume? Like I said, well north of the typical volume level we expected, and also the fact that not quite half, but pretty darn close. 41% of it is going up in a weekly, a contract that's expiring in about 7 days, Derek.
Yeah, no, not a surprise to us at all. I mean, listen, there's been a lot of activity, a lot of focus on the energy markets, particularly on the crude oil market. Going back to certainly the events of October 7, on the heels of that, we all knew that we were going to have an OPEC Plus meeting at the end of November. We'd had that. There was a great deal of uncertainty around that. But I think the point you're making is, listen, in back-to-back weeks, crude was up, crude was down. I mean, these are purpose-built markets for options to be able to manage risk. It's so hard to flat price hedge in markets that are up and down 7% in back-to-back weeks. So, I mean, options are the perfect tool. And if you're looking for effective price exposure tools, short-dated options are low premium, and they're great ways to be able to, manage your risk. And listen, if you want to take a punt and think that, hey, I think it's had a big sell-off here. I think that, maybe buy a cheap call here, 1 week to go. Short-dated premium means, low premium, and that's a great way to limit your loss if you're wrong. Buy a call, you just lose your premium, as opposed to try to buy a future, try to buy some spot. I mean, you got to stop that. That can be expensive. So great cost-effective ways to express short-dated opinions. When you look at the volume in the last week, that's not isolated. I went back and I looked at our November volume. Our November volume was up 25% in WTI options, and that was about just under 200,000 contracts a day. So you're certainly seeing elevated levels, but we were already at elevated levels in October. When you look at the December, the month-to-date results in energy, our December, granted it's, we're 7 days in, but our energy options is up 68%. And not a surprise given what we're seeing globally, what we're seeing in geopolitics. And you're seeing the market trying to figure out, does the market want to find a rebounding price and get back to mid-80s? Do we think that this is going to be a dead cat bounce and, we actually push even lower? There's just so many questions out there. A lot of it's linked to global growth questions. A lot of it is links to what's going to happen in the rates environment. And it's just so many of these markets are interconnected. So using options to express an opinion or to expose yourself to these markets is just a really smart play. So I absolutely commend your listeners for being actively involved in options markets. They're just great, very flexible, very effective tools in very volatile and uncertain markets, just like we're seeing right now.
Let's see what we are seeing out there this week, listeners. As I said, the 70 strike, the 70 handle has been an important psychological level. We did break through it, so no surprise that it would be the Jan 70 puts that were leading the dance this week, doing a little over 30, about 31,000 contracts on the tape right now. The big day actually yesterday, nearly 15,000, so as we really broke through that 70 handle, that's where we saw a lot of paper, obviously. But the rest of the week, no slouch either. 6,500 on Tuesday, 4,500 Monday, and about almost 5,000 today. And again, closing throughout the week. So as we kept getting closer and closer and closer to that strike, folks continue to get the heck out of Dodge, maybe roll to some other strikes out there as well. So a lot of action on the 70 put strike. Not entirely surprising given the importance of that level. Right behind it, 65 puts. Like I said, probably some rolling activity going on this week as well. They did roughly half the paper, about close to 15,000. The big day for those, also Wednesday, 5,500. So obviously not one-to-one on the rolling side, but there probably was some rolling paper there. Today, I should say, looks a little bit closer to one-to-one. 4,800 of the 70 puts versus 4,500 of the 65 puts. So chances are we're seeing a decent amount of rolling activity out there today. 3,200 on Tuesday, slightly closing there, and about 1,100 on Monday, slightly opening. So makes some sense. Some folks would be taking off your 70 puts or rolling down to the 65s. If you're looking for an upside story, you got to look all the way out to the 80 calls here. These are in Jan as well, but only about 12,000 and change of these going up. But still good enough for the number 3 overall volume slot this week. Looks like no paper today, but the big dog was really Tuesday, about 4,100 on Tuesday, about 4,000 yesterday, and about 4,000 on Monday as well. All that against OI of about 16,000 on the strike coming into today. And mostly closing all week. So folks bailing on the 80 calls, also bailing on the 70 puts. So kind of interesting. Maybe some folks finally convinced that an 80 handle in the next 7 days may be a difficult challenge for all things WTI. Let's roll out really quickly, see if we see any other interesting and or aberrant paper here in WTI. Then we'll get out of here for this week. If we go a little bit farther out, see, it's not all near-dated, listeners. It's just mostly near-dated. If we go out a whopping 40 days, which seems like an eternity in the era of zero DTE, listeners, but if we go out 40 days to the Feb contract, the 65 puts also lighting it up out there this week. And again, not entirely surprising. A lot of folks opening out there on the 65 puts. Obviously, we just broke through the 70 handle. I want to get a little bit more time, a little bit more reasonable strike selection. Makes a ton of sense. A big day on these, 5,500 on Wednesday, about almost 3,000 on Tuesday, 2,100 yesterday, and about 1,200 on Monday. Opening all week. And of course, today's paper is against an OI of about 13,000. So could indeed be opening or closing today, but it looks like it passes prologue, probably opening out there as well. So a lot of opening downside paper. Not entirely surprising. Closing on the 70 put strike also not entirely surprising out there as well. Unless you want to look for some surprising paper, listeners, how about June pars? How's that float your boat out there? We had, looks like about a little over 4,000, about 4,200 of the June pars, aka the June 100s going up this week. Unfortunately, though, listeners, looks like it was mostly closing. So it seems like somebody getting the heck out of Dodge. Looks like they might have rolled to the 80s on Wednesday. They went up about 2,000 times on Wednesday, and about 1,800 the 80s went up. So maybe rolling down to a more reasonable strike. The rest of the week doesn't line up, though. It just seems like someone bailing for size, and there's still about 6,500 open on the pars in June. So there you go. A little bit of upside, but mostly getting the heck out of Dodge, just like we have to do for this week, listeners. All right, that music means we have come to the end of another epic journey through the world of all things futures options. Derek, I'm glad we can get you back on for our annual check-in. This is fun. We have to do it more often than once a year, Derek.
Well, listen, it's always great to do a check-in. Maybe we do a little summer edition of this and see where we get to. There's just so much going on. It feels like 12 months
I'm going to pencil you in
too long to go in between.
I'm going to pencil you in for June, Derek. We'll see what your title is by then, but we'll see if we can get you on for June. How does that sound?
That sounds great, Mark. I appreciate that.
And before you roll out of here, you gave us your look ahead and all that other fun stuff. Anything else you want to leave our listeners with before we go? What they can look forward to or anticipate coming down the pike from you folks over there at CME?
Just more good stuff, more engagement with you, our customers, more functionality, better tools and capabilities, better analytics, and we're going to get some cool stuff out there with our partners at Google as well. So, Mark, I want to wish you and your listeners and the staff over there at TWIFO a very, very happy holidays, wishing you and your families all the best for a happy and healthy 2024.
Well, I appreciate that. Same to you and same to all the listeners out there. Of course, that is going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. After that, for all you pro folks, coming back for a little bit of the old options oddity. Should be a fun one. You don't want to miss that one. Then back again next week on the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.